In the last 24 hours, the US dollar has broken through key support levels. And now this is spurring on further downside for the US dollar. This can mean some great things for the Bitcoin price as it begins to price in the possibility of never going back under $25,000. Now this is based on the charts. We've been calling this every single low throughout the bull market, which started back in November of 2022. All of the videos are on the channel, and essentially these are like little mini masterclasses for you guys for free every single day. Now, hit that like and subscribe so that you can let YouTube know that you want to see more of this content, especially when it comes to understanding the past, understanding what's happened in the markets to forecast, to know what to do in the future. We are your home of macro cycle analysis across stock markets, real estate markets, commodities, and of course, Bitcoin and cryptos. Now, if you want to get more on how to invest full-time, how to trade full-time like our members are, even the beginners hitting their first short trades, making some good small profits here, all the way up to the 30s, the 40s, the 100% returns, make sure you hit that link in the top of the video description for TIA Crypto. That's the premium membership where you learn how to trade and invest full-time. All right, guys, let's take a look at what's going on here with the collapsing US dollar. There's that key support level that we just covered in the video a day ago and followed up again yesterday as we continue to see these support levels get taken out. Now, we, of course, have been here for years and looking at this top that came in for the US dollar. I called this almost to the exact day just based on chart analysis and the media. The media goes mental at key turning points in the market. So stay tuned to that. And of course, like I said, subscribe to the channel. Now, the point here is that if this US dollar continues to go down, this will potentially allow assets to continue to go up. And that's why I've got this question here. How will the stock market go up without liquidity? What I try and do on the channel is explain these questions that the media, pro traders, pro investors, your favorite YouTube and Twitter personalities in the financial space, they pose to you as real threats to your money, real threats to the economy. Yet none of them have come true. It is all bullshit. It's all smoke and mirrors out there. But at the end of the day, that's what this whole game is about. No one really knows what they're doing. And the idea here is to try to uncover that and make things way more simple than they are. This is really quite simple, and you've seen it happen day in and day out here on the channel. So how will the stock markets go up without liquidity? This has been a big question for people. Well, for one, there's multiple factors here. If the US dollar keeps going down, that's going to ease the pricing for the assets. If the US dollar goes down and these assets are actually worth holding, they'll continue to increase to balance out the drop in the US dollar. And you might say, well, what's the difference? If the price is going up and the US dollar is going down, what does that matter? Well, you've got to put your money somewhere, and that's the whole point here. We need to be investing it somewhere and not sitting on the sidelines, because that's what the market, well, that's what the Fed, that's what the government wants us to do, and that's what the market is actually doing, because you can see it in the price chart. You can see it on Bitcoin, you can see it on the NASDAQ, which is now up over 35% since the bottoms in October, and the same sort of thing for the S&P. Investors, smart money are actually putting their money into these markets, and this is causing the price to increase. So that's just one thing. We have many other factors which are going to come into the market, and we'll continue to cover that throughout the 18.6-year real estate and economic cycle. This is the second half of this full 18-year cycle. Then we hit a peak, then we collapse. We're not collapsing at this point in time just yet, but that big one will come. We're in this last stage where things get very volatile. A lot of money is to be made, but you need to be making that money and taking those profits as well, because bad times will come, as they always do. It's the big boom bust cycle, which has been around for over 200 years. Okay, that is the big picture. Into the small picture, this is part of the US dollar collapsing. The next support levels to the downside are around this 99.5 level. So this, it really doesn't matter too much. The main thing we want to see here is the lower highs and the lower lows continue to come into the market, because this is all part of the analysis and where we think the market is going for those reasons that I just mentioned. We'll continue to pay attention to what the media is doing and these levels. The reason for the levels is so that we can see the trend continue to play out. So our eyes are on the next level here at about 99.45. for the US dollar. But good to see that the market has continued to drop the US dollar. And it's possibly on the back of the CPI data here. I posted on Twitter recently saying that inflation is over. All of those fears which have been going around for the last 12 months, you've basically seen inflation go from 9% to 3%, and these levels are basically all the way the same as they were all the way back to 2018. 5 years ago, July 2018, August 2018, it was 2.9, we're at 3.0. So these inflation fears have basically been dismantled, and the markets have been pricing that in now since October. Call that about 9 or 10 months now. Meanwhile, most are still in fear that we're going to see inflation rise again and it's going to go crazy like the 80s. Remember, these are the headlines that are required to get clicks, and the media needs to keep pumping this sort of thing out, and they keep reminding you of all the bad. Yet when you look at history over 100 years, 120 years, markets typically go up, and bear markets typically only last roughly 10 to 12 months. We've seen that. We saw a 10-month bear market. There's no surprises that the market's up. Now, of course, I've got a ton of awesome data to get through, like I had in yesterday's video as well. But just as a news update here, here's the CPI. CPI is now down. Big deal. It's over. Let's get on with what's going on in the markets. Now, the next thing that everyone's going to be focusing on is, of course, the interest rates. We go forward to a couple of weeks from now. We've got the USD FOMC statements. Everyone's going to be focused on these interest rates. Are they going to go up? Going to go down? Are they going to stay where they are? At the end of the day, I think a lot of the market is already pricing in what's going to happen. And currently, they're at 5.25%, and the majority of the market is pricing in another increase. If they price it in and we get the increase, probably still going to be fine for the markets. If we don't get the increase, that's going to allow the markets to spur on even further from where they currently are. So there's really no downside here. You get the increase, well, most of the market expects it. You don't get the increase, there's even more money now to be throwing at the markets because you're getting less money for your money sitting on the sidelines. So this was the post from the US dollar, the major piece of the cycle puzzle here before we get on to the Bitcoin prices. Looking at the cycle, basically USD is going to come down like it has done in each of the previous second half of the 18.6 year cycle. So that's where we currently sit. That's what we're waiting on. Let's see whether we can get to this sort of 40 or 50 odd % drop by the end of this collapse in the US dollar. But the main thing to note here is that Bitcoin has never experienced a significant USD crash of greater than 30%. Throughout Bitcoin's history, the US dollar has basically been going up. It's 13-year history. Sure, there have been some pretty significant moves to the downside, but it's never experienced anything like what the US dollar has done in the late 80s and in the early 2000s there. So we'll keep paying particular attention to that as well. Now, for BTC and these current levels, like we've got in the title, we're probably pricing in prices that are never going to be seen again. So far, we're not going to see the low at 15.5. The reason for this is technically based on this structure. If we were to see those prices, this show is over. You don't want to be buying this cryptocurrency. If you see these key lows get taken out, that means that there is something fundamentally wrong and it's not worth investing. It would then become like an altcoin that has seen its cycle and it's probably never going to come back. That's why these levels are so important. And any of those, what I call those stupid tweets that they talk about, here's the chart, and then they say not many are waiting for this dump and then a recovery before a huge bounce. None of that stuff makes any sense technically when you understand how to read chart patterns. Those patterns can't play out. You can't see this market go to those levels and then bounce to new highs. If these levels are taken out, that is a key fundamental breakdown of this chart, which would mean you would have to then go and test lower prices again. And then if you're underneath those lower prices, it takes a long time to recover from that. So that's the difference here. Now, I've said here on tweets publicly at the time, I think all of these are missed opportunities. We're probably not going to see prices under 22 grand again for BTC. 19.5, 17, 15.5, all off the cards. And eventually when we break out of this 31 to 32,000, probably not going to see that 25 or this low here, which was $24.8 thousand again. So once this 32K breaks, then I would say we're probably never going to see prices under the 25. And you could almost say that probably not going to see the price go under $28,000 to $30,000 again this cycle, depending, wait for it, depending on how high up the market pumps from this point here. So if we are pricing this in and we've got the US dollar collapsing, we've got money waiting on the sidelines to come into these assets, then there is a possibility that we do get a pretty significant pump to the upside. I've gone through this in heaps of videos on the channel looking at specific timeframes as well, 4-year cycle. You've got the repeats here and also timeframes within particular price ranges. So like I said, subscribe and like the content so that you can see this. They're your mini masterclasses on how to read the market, how to understand the past to forecast the future. Most don't put the time in. I hope you do. Okay, so these missed opportunities, basically you can see them in previous cycles. You can go back to 2015. Here is your low, $200. Market runs up, gets this peak, and then everyone says, I'm going to wait for it to come back to 200. Never happens. Then 300 becomes the higher low. Missed opportunity, market runs up. Then 400 becomes the missed opportunity. You're not going to get Bitcoin under $400 again for that entire cycle. Moving up higher, 550, you never get Bitcoin again for that entire cycle at 550. And you never get it again in history. $900, same deal. $1,800, and we're just looking at key support levels, key macro support levels. 1800, missed opportunity. I remember that one pretty well because that was a missed opportunity for me while I was in the market from March and April as the market ran up. Missed opportunity here. I thought it was going to collapse. Didn't happen. Early days, 6 years ago. It is what it is. Then you get that final peak, $3,000 missed opportunity, so on and so forth. The same thing is happening again. Plenty of missed opportunities, and most are unfortunately going to miss out on these for BTC. Don't be one of those. Make sure you have your eye on key support and resistance levels, and when those levels are reached, then you could probably cross off these lower levels, which then allows you to put your stops at certain areas. If that was to break down, something fundamentally is wrong, and that helps you manage your risk in the market. Now over to the NASDAQ and the S&P. There's pretty decent data here, like I looked at in yesterday's video, but even more data that I wanted to share with you from yesterday's video, just showing how bullish these markets are. And honestly, it surprised me as well. I didn't think we would see such a strong move to the upside with almost no pullbacks, breaking through resistance levels, hitting new fresh high after fresh high after fresh high, almost every single day since we broke out in May. Just basically fresh highs of closes, fresh high prices. And I've been posting about this on Twitter. The importance of this is that these markets have continued up in the face of all of the fear. This is typical of a bull market. It's called a wall of worry. So you got all of the worry, all of the problems that the media throws at us, and professionals out there that say they've got decades of experience, yet they miss the very facts in front of their eyes. Not just my opinions, these are just the facts. Like I can't change the price on the chart that is telling you higher lows and higher closing prices and higher prices altogether on the daily, on the weekly, on the monthly, on the quarterly, on the 6 monthly. It's absolutely wild. We have now broken into new fresh highs for the NASDAQ, and this was the key level before. This was the resistance. Just over the last few days, we held support, and in the last 24 hours, we broke to new high prices for the NASDAQ. For the S&P, same thing again. We just broke past those highs. 1 day close. We want to see at least 3 days close above these levels, and that was the previous resistance. That was the level we were looking for, around that 4,500. Now we have the tops coming up here at about 46, and then we run all the way to the all-time high at 4,800. Like I said earlier, this has taken me by surprise with how strong that move has been, but once we started to accumulate and consolidate these levels, I thought this could be a pretty decent breakout to the upside. Even I thought maybe we would get some more pullbacks here along the way with people being fearful that this isn't a true breakout, but that has not been the case. This is a true breakout now, and we are heading towards the all-time high, just 7.6% away from that all-time high on the NASDAQ. And for the S&P, we go to the all-time high, and the current price, we're just 6% away from the all-time high. You can't be in a bear market at these sorts of levels. It's not a bear market rally at these sorts of levels right now. Absolutely wild. So, onto some of this data which suggests the second half of 2023 is going to be even higher. I am not making up the data. This goes back to 1995. Stick with it. Essentially, we're looking at times of the prices between March and June, so the quarter there, and then you have this June swoon. The idea is that for that week or so, the price goes down, and then from June until July 23rd, so June 27th to July 23rd, you have a positive move to the upside. And so right now in 2023, we've seen the March to June period up. So we've seen 12.59%. June 19th to June 27th, we have seen a move to the downside. So this is really interesting to see. You've got, there's your 16th, there's the 20th of June. So right there to the 27th, got about a 1.8% drop either way. Even if you looked at the top, it's still a negative. And then what happens from that point is that we have a positive move to the upside. So a positive move from June 27th all the way to the July 23rd with an average change of about 2.25%. So let's take it from June 27th. There's the open. We go up 2.25%. The market has already exceeded that move into July 23rd, which is what this data is based on. We should see about an average there. So we're already above the average. So that's a little interesting one for the short term. And this other chart here looks at the VIX. So the VIX going underneath 13.5 after being above 20, first time in 6 months. So we've covered the VIX a lot here on the channel. You can see this white line is the 13.5 level. I've called this a bull market as it continues to grind underneath the 17 level. And I've explained this on Twitter, doing a nice big post that you can learn from that. Essentially, we were over 20. There's your 20 level. And then for the first time in 6 months, it goes below 13.5. This shows that 100% of the time, 6 months later, so towards the end of the year, the market is positive. So there is no fault in this so far. 3 months, there was one case that it was negative, but essentially 2 months later and 6 months later, the market has been 100% of the time higher when this signal shows up on the VIX. 2 months and 6 months later, the S&P is up from that point. So pretty wild data to observe that has a 100% hit rate. Now, maybe it's a 99% hit rate over time once we have a few more data points here. That's all the data points right now. But nonetheless, this is just the data. The data saying that we're going to see higher prices on the S&P towards the end of the year. I'm always fascinated to see how the analysis continues to play out time and time again. Even though I've been doing this for over 15 years, studying the past to forecast the future, basically figuring out what's going to happen next and not trusting in the news, not trusting in those pro traders and experts out there, doing my own research, putting it into the market time and time again. I hope you're doing the same. Hit that like and subscribe. And if you obviously want further details on becoming a full-time investor and trader, link in the top of the video description is for TIA Premium. Join our members over there, trading cryptos and learning how to put their long-term portfolios together for success. I'll be back here again with a new update. I've got an interview coming up with Alessio Rastani as well. So let me know some of the questions down below, some of those fearful topics that the media continues to throw our way, and I'll continue to debunk those here on the channel so that you've got a clear view of what's going on in the markets. See you at the next video. Till then, peace out.